Welcome back, everybody. Bruce Porter's back for this week's Dollars and Cents segment, where he takes a viewer's email and answers their financial question on the air. So, you ready to take a look?
You bet. Let's do it.
Glad to see you here once again. All right, here is the question. Explain why I'm being taxed on my Social Security benefits. I thought they were tax-free benefits.
A lot of people have a lot of questions about that, and here's what we have to understand about taxation of Social Security. It's all dependent on your provisional income. So provisional income is all of your total income plus half of your Social Security. And that includes municipal bonds or tax-exempt income also. A lot of people forget to add that in. You add that in. If your provisional income is under the base amount, which for a single taxpayer, the base amount is $25,000. For a married filing jointly, it's $32,000.
Okay.
If your provisional income is below that, there is no tax on your Social Security. But like a lot of people, if they retire and they've got like a pension or they've got other income that causes that to be a little bit higher than that base, then 50% of their Social Security will be taxed at their current tax rate. If that number is above the adjusted amount, which is 34 for a single and 44 for a married couple, then 85% of their Social Security is taxed. So what we try to do is we evaluate what is causing the problem. Is it something that we can control? Like, do you have taxable investments that you could redirect into a deferred investment? Then you would eliminate that 1099 taxable income, which might be causing you to get above that threshold. Now, if you have pension income or systematic income coming from a retirement account that you can't control, you're stuck with that provision. So there's not a lot you can do about that. But in a lot of cases, people have taxable income from a variety of different things.
All sorts of investments, securities, dividends.
Exactly. Capital gain, all kinds of things that they could actually redirect, still keep it accessible for income in the future, but eliminate that taxable income. And I often ask people, why are you paying taxes on money you're not using for current income? If you need it, then you need to take the income. But if you don't necessarily need the income, or if that 1099 is hitting every year and you're not using it for income, it's causing you to pay additional
taxes.
So if you just redirect those investments, that might help you eliminate or reduce the tax liability on your Social Security.
What are the options for redirecting them? You redirect them where exactly?
Well, the most popular is either a fixed or an indexed annuity. Annuities' characteristics are deferral. They defer the growth and you compound the growth until you need it. And then when you need it, you could take a systematic income, you could take a guaranteed income, you could just do withdrawals as you need it. At your discretion. So there's lots of ways to draw money out of an annuity later on down the road if you need it or when you need it.
If you need to, but typically a younger person, you don't direct them toward an annuity. You start looking at that later. Is that right, or is that?
Pretty much, because of the IRS rules. Annuities are pretty much suitable for an older age to protect and to generate income. The purpose of annuities is income. Growth can be had if growth is there, and if growth is not there, if the market corrected, then annuities do have characteristics of protecting your principal and your previous earnings that allow you to withdraw it, but it won't reduce due to market conditions. So there are some advantages to that, but annuity, they're not all suitable for everyone. So
that's when you need to talk to an expert.
That's why
you need to
trust
talk to an expert.
like yourself. Because
and find out what your situation is, because that, you know, that will enter into what your decision is. All right.